You're listening to ChartingWealth.com for Monday, the 11th of May, 2015. We are looking, as we always start, with IYY. This is the two-day chart. Here's our two-day trend line, and you can see that it is continuing to hold up, even if you paid attention to the market today, with the overall market being up 1.33%. Here we go. That is a pretty decent trend line, continues to hold. What does it mean for us on the 4-hour chart? Well, the 4-hour chart's actually showing that our trend line was broken at the end of the day. We're using as our big trend line, of course, the 2-day. This is the half-day or 4-hour crossover going up, some significant movement up at the beginning of the day, a little bit higher toward the end of the day. These are the two candles for Friday, the 8th. Now, let's go and take a look at SPY, which is the Standard & Poor 500. Again, trend line has not been broken on the 2-day, but very interesting, it is trying to cross back over, going up. It crossed immediately over and then back over. What does that mean? Because we've not really seen that happen in the 4-day chart, well, at all, if you go back many months. What's going on? Why is it happening now? Well, if you remember, what we've been teaching is that the market, when we come out of the month of April, it's the last of our 6 good months, sell in May and go away. What does that mean? That is a saying you hear all the time in the stock market. It means that the big money leaves the market in May, that the volume decreases significantly, the market gets choppy. Choppy is this right here, down move, up move. That's what you see happening on the 2-day chart. Not good for tracking, is it? Our trend's not been broken yet, but our MACD is trying to turn over. Now look at this though. You see an acceleration down still in the derivative oscillator. What is that about? Well, you can see the significant down movement on the 2-day chart. If you see this candle wick right here, that's the reason that you see the derivative oscillator continuing to push down, even with the MACD trying to cross back over going up. All right, now let's go to the 4-hour chart on the S&P, and you can see the significant changeover, and you can understand why the 2-day chart shifted over on that. We are still officially, if you're looking at just the 2-day trend line, we are in a down move. However, again, this is why I despise this time of year trying to chart the market, because anybody will tell you it's difficult. We don't have the 2-day trend line being violated yet by the actual 2-day chart, but this is very concerning whenever the MACD crosses back over. We will see, starting on Monday, how much of a true uptrend this is, or if this was just a busy Friday. Okay, now let's trend back out. We're still on the 2-day. We're going to go over to my favorite chart, which is the Qs. It was up 1.25% today, but again, you can see the movement is below the 2-day trend line. You can see the derivative oscillator continued to accelerate, and look at the Qs. It crossed over going down. It is still in a down movement on everything that's showing us on the 2-day chart. Now, let's see what we see on the 4-hour. The 4-hour is trying to push through. It has pushed through the 2-day trend line. The derivative oscillator is falling off significantly, probably getting ready to switch back over. And we see that it's attempting to cross over. Now again, what we're going to see on Monday is going to tell us a lot more about what was really happening, if it was just an anomaly here on Friday, or if we really have a market that's going to be trending back up again. Again, like I said, the Qs was up today 1.25%. So let's range back out to our 2-day chart, and let's look at the last thing, gold. What is gold doing? Again, 2-day chart on gold shows us the last 2 days of the week. Gold is continuing in a down move, although gold was up 0.48%. That is not 48%, 0.48% today, but still, look at that nice trend line. It's still trending below. We have not had a crossover going down on gold yet. It's just sliding sideways, still in an up move on the 2-day chart. But we see, when I say that, it's still in an up move as far as the MACD goes. That's these indicators here. Although we can tell that since the 24th, the movement has been down on the derivative oscillator. Now we're going to revert back to the 4-hour chart on gold. And again, not a whole lot of difference, is it? Continuing to see that it's below the 2-day trend line, and even though gold was up a little bit in the morning, it is still well within the candles over the 2 prior candles over the day before on the 7th. So not a lot going on in gold, still trending down overall. And the overall market trying its best to move back up as far as IYY, which is the overall market, the S&P 500, and the Qs. So interesting end to the week. As you prepare for your new week of trading, again, pay close attention to how the trend line holds and what we see with the MACD as the new week starts. Thanks again for listening and or watching, depending on how you're joining us. We appreciate you. We love to hear from you. Please be sure to post things on Facebook and Twitter. Let us hear from you. Please always feel free to email us. Again, chartingwealth.com, and hope you get our daily email market reviews. God bless. Good trading.